What's up?
Bombs are still falling on children in Ukraine. I've been there, and I've seen for myself how the war is tearing little lives apart. They're hungry, they're frightened, they're desperate for safety. That's why
little malfunction with the old camera.
Website today and make a donation of just £5 a month.
Here he is.
War Child is on the front line, reaching traumatized children right now.
Let's get rid of that. How we doing, YouTube? We good? Is that chat working or is that chat working? I don't know. You tell me. Are we good? Are we good? Are we good? I hope we're in business. I hope we're in bee's knees. What's up, Russell? What's up, Russ? Looking good, looking good. We're in bee's knees. Good stuff. What's up, Tom? Tommy Two-Tone. So we've been having a little sauce inside of RP this morning. Been having a little sauce this morning inside of RP. So we've gone short. Back down to a discount of the 15-minute dealing range. Anticipating more than likely they're going to put us at fair value of the hourly dealing range going into PPI. Alright. Which is down at 385. So currently just sat neutral, waiting for PPI. For those who know my PPI model, that's currently what I'll be looking out for. We know that we now have a new clear divergence on this high. After delayed SMT, we now have a new divergence. So this is now suspect going into PPI. But ultimately, I'm looking for lower prices today. So at the moment, just sat neutral. We've traded this short. This morning, getting up to a premium of the hourly dealing range, taking it back down to a discount on the 15-minute. So I thought I'd come and jump on YouTube, come say hi to you lot, you YouTubers. You YouTubers. For PPI. But currently just sat neutral as we lead into it at 8:30. So as you can see now, we're in between the 262s on the daily, which is when your middle name becomes liquidity. Alright, so whatever your first and last name is, just stick liquidity in the middle and that's what your name becomes if you start trading inside of this, right? So you just want to be careful, you want to be mindful, you want to be trading at the extremities. The premiums and the discounts, right? Check out Ainsley with the yeets. Yes, sir. I'll join you on the lobsters, mate. How about that? Bosh, get some. So good morning for those of you who jump on YouTube this morning. Good stuff. Welcome in, welcome in. If you're new to my channel and you're looking for a frantic trader who's going to be going, traders, trader, that's not me. Okay, so we're range traders. We take daily range, so we're patient. But if you have any questions, feel free to reach out about market structure. You probably won't see anybody do market structure the way that I do market structure, just being completely transparent with you. So if you have any questions, then feel free to reach out. But this is the red pill way of doing premium and discount. So if you want to be a red pill trader, then this is essentially how we do it, right? How we utilize dealing ranges, premium and discount. Okay, so this is like the core principles of market structure. And understanding lower time frame to higher time frame breaks of market structure, and higher time frame premium and discount of dealing ranges, right? So with PPI, this is my current higher time frame hourly dealing range. This is the current protected high. This is the low. And we have our premium side and our discount. And I'm anticipating them to put us at fair value, which is 50% on the hourly dealing range going into PPI. Why? Because they do that every high impact news event. They'll put you around fair value. Right? It's just what they do. Why do they do that? Anybody? Why do they do that? Let's make it a two-way conversation, guys. Otherwise, I fall asleep very quick. Why would they put us back to fair value on the hourly dealing range or on a higher time frame dealing range? Why would they do that? Good stuff, Plain View. Appreciate that, brother. Real nice. I like it. Guys, if you can comment inside the YouTube chat, it helps me because I have so many screens up. I can't track all the different chat tabs. Right, all the different chat tabs. Okay, so just help me out a little bit. If you're on YouTube, please just use the YouTube chat. It helps me out. Exactly. Yes, sir. It's not only that, it's a gamble. Right? So anybody who's trying to trade long or short, it is essentially a gamble. Yes, you can put the principles and there you can side an argument on your side. Yes, you can do that. Right? So the more context that you can stack in your favor, yes, you can do that in terms of overall directional bias, but more likely you are just gambling. Okay? So they'll likely put you at fair value and it's either yeet or yeet, right? So every time you have a high impact news event, you want to be looking for fair value of a higher time frame dealing range, and you want to trade towards that. So this morning we traded this short, this very, very high inside of red pill. It's the entry. Taking it back down to a discount of the 5-minute dealing range, ultimately anticipating them to get it back down to fair value on the hourly ahead of PPI. And then I have a PPI model, okay? So you guys will know what my PPI model is by now. My PPI and CPI. Good morning, Ed. Good morning, broski. I do trade ES. ES and NQ. Predominantly trade NQ though, bro. I do trade AS now and again though. Now and again, I trade it. So yesterday trading NQ is very, very clear in terms of weak lows inside of a premium for price to go and drive back towards a discount of this hourly dealing range. So I personally traded NQ yesterday, doing the same. But you can trade ES. But yeah, I just prefer NQ because you can make insane sums of money very, very quickly because NQ is far more volatile in its swings, right? Whereas ES is a bit slow, a little bit lethargic, plods along, right? That's its personality. It's a little bit slow and ploddy, right? So if you like slow and ploddy, ES is probably your bag, right? Whereas if you like a little bit of heavy metal, as LP calls it, NQ is more for you. Yeah, or you have a small prop account. Yeah, absolutely. So the easiest, like my strategy for passing a prop account is based on ES. There's nothing wrong with ES, right? The problem with ES, it just takes it takes a lot longer for price to deliver to your target, right? It takes a lot longer for price to deliver to its target. So look, if we just take yesterday, for example, like just look at this range on ES yesterday. Okay, so this is from 10 o'clock to lunch, right? 12:30. You have a 28 to 40, so a 12-point range. 12-point range. Whereas if we go to NQ at the same period, it's just far more volatile, right, in this period. So for me, I prefer trading these very, very clear, distinct moves versus trading that. If you look at it on a 1 minute, right, that versus that. Both consolidation, but these are quick to deliver, easier to pick your PD arrays, etc. And price delivers to target quicker. So there's nothing inherently wrong with ES, it just takes longer to deliver. But if you're looking to pass a prop account, the easiest way is just trade ES. Just trade ES and just take your five handles. 2 contracts, 5 handles, 2-point stop, TP at 5 handles, rinse and repeat. That's all you do. It's the easiest way to pass a prop firm. ES, 5 handles, 2-point stop, sorry. 5 TP. Easiest way, right? And if you want to know how I trade, I'm a turtle suit trader, so this is where you'd be looking to get in. So every single time, you're just looking for your 5 handles. 47, 52, bosh, out. See ya, 2-point stop. Rinse and repeat. That's all you do on ES. 2 contracts. 2 contracts, 5 points, 2-point stop. That's how you pass a funded account. Or a valuation account, whatever you guys want to call them, right? Because that is $500. Do it 6 times. And you have passed yourself an evaluation account. Okay, and then if you take a loss on 2 points, 2 cons, no. Right? So, on your next trade, because I see people doing wild stops, by the way, where you have like 1-to-1 and all that madness, right? So you are risking $200 for $500 every single trade. and you're going for 5 handles, 2 cons, 2-point stop, rinse and repeat. So if this is a losing trade, you are minus 200 bucks. Oh shit. Hell no. Right? So you got to do that a lot of times before you blow an account, right? If you're wrong that many times in a row, you got work to do, right? You haven't figured out what it is or how you're supposed to trade. Okay, so if you take a losing trade, you're minus 200. So what you do is on your very next trade, you then go 1 contract. So if you were trading up here, and this is all hypothetical, but if you were going short up here at 53, you'd pay yourself 48, right? But this time, you only take 1 contract. Same stop, same TP, right? 1 contract. Why are you doing this? Because you're mitigating this loss. So, and every single time you're fixing your TP at 5. So, if this is now a winner, you've now made 250 bucks. Right? So you're minus 200 is now plus 50. So you now have, essentially, you can be wrong 2 times in a row. Right? You'd have to be wrong 2 times in a row. You get basically 2 stabs at your trade idea, your trade thesis. Right? Before you go into a bigger drawdown. So if your first trade is a losing trade, it does not matter. Right? You just half your side, you do the same thing. And then that trade mitigates your loss. Right? And then you're actually plus. You're in the positive again. And then once you're through that, you go back to 2 contracts. And then if you land that, you're at 550 plus, right? Done for the day. Hit your daily goal. Stop. That's how you pass a funded account. Easy peasy, lemon squeezy. Just rinse and repeat that. Honestly, just rinse and repeat that. If you trade NQ, and if you trade NQ with me inside Red Pill, easiest way to do it. 3-point stop. That's how we trade. We trade with a 3-point stop. Pay 1. So you take 2 contracts, 3-point stop. Take 1 off at 10. Take another 1 off at 20. That's how you trade if you're trading NQ and you want to pass an eval. Easiest way to do it. Easiest way. Alright, so those are my 2 strategies. If you want to pass quickly, that's how you pass. It's fucking, honestly, you can walk them in your sleep. And why 5 handles on ES? Because 5 handles, even if you're on the wrong side of the move, more times than not, you'll still deliver 5 handles with ES. Alright, there's 5 handles everywhere. Right, so for example, this trade here. Let's look at the range. What's this range? So from that, 3.5, not quite. 425, close enough. 4.5. But generally speaking, even if you're on the wrong side of the fence and you're turtle suiting the high, you will get your 5 handles, right? Before price expands off, before price expands off, before price expands off. So even if you're on the wrong side of the fence, more times than not, 5 handles is going to net you, is going to bag you, right? So if you trade ES and you're just looking to get funded, or even get through your funded accounts, get through to the point where you can start taking withdrawals, like so you build your buffer, right? Just take 2 contracts on ES, fix your TP at 2, terminate your trade at 5 handles. Rinse and repeat. Honestly, even if you're looking for range for 20 handles, just fix it. Just fix it. Do that 6 times, you're funded. It's not difficult. It's really not difficult. All right. So, who was asking me that question? Anton Butieko. If you are hoping to pass the evaluation, mate, I hope you take that on board. Because honestly, it's the easiest way, bro. So almost back at fair value on the hourly, which is what we're anticipating them to place us going into PPI, right? Classic PPI, classic any high impact news event. Search for your higher time frame fair value. That's where they're going to put you. So if we look at our divergences, we have this. We obviously have divergences up on the high with ES now, right? Which is clear and obvious to see. ES has gone and taken ATH. NQ has still got divergencies up on this high. ES has also now gone and taken this high, and it's taken this high. So I would anticipate price to rally out and clear out these highs. Okay. So if we look at where we sit on this higher time frame, we are inside of a 15-minute discount, right? So we've just gone from a premium, higher time frame premium, back down to a discount, which is what we traded this morning inside of Red Pill, right? So for all you little 1-minute traders out there, there was your break of market structure, your little return up into OTE, turtle soup trigger. Lower time frame leads to a higher time frame break of market structure, where your 5-minute dealing range is down here, right? So 1-minute break, 5-minute break into a 15-minute discount. Right, so lower time frame leads to a higher time frame break of market structure. Okay, so I'm not going to go into too much detail, but if you are anticipating a New York close reversal, this is what you'd be anticipating. You'd be anticipating price to come back down into this range of London for continuation for a potential short at the New York Open. But for those of you who know my PPI model, you're looking for the most relevant 15-minute high and low pre-8:30, which is up here and down here. So both of these are going to get swept for PPI. They are both going to get swept, whether you like it or not. So at the moment, we are at 8:30. Going to get PPI. Have I dropped the news in the channel today? I've not, so I'll do that in a sec. You're currently trading at fair value, right? Going into PPI of this 15-minute dealing range. For me, like this isn't where you want to be trading. Right? You never want to be trading here, leading into a high impact news event. Right? You're just liquidity. Especially when you know that this high is going to go, this low is going to go. So it's more likely that you're going to get just choppy price action leading into PPI at 8:30, right? Price could rally out here, but it's high risk. With news at 8:30. So this is where you just got to learn to develop patience, right? You're currently in between the 262s on the hourly, right? It's not where you want to be trading. Right, let me get the calendar up in the channel. See if we got any earnings today. What's the date today, guys? Losing my shizness. What is it? It's the 14th of March. 14th of March. Adobe aftermarket close. I recently cancelled my Adobe membership, so short it. I genuinely want to see where it's currently trading. Yeah, I was going to say, like, for me, Adobe is a great short, like a long-term short. I think this company's in a lot of trouble. Like if you want a long-term positional short, for me, I got a feeling today on earnings this is gonna fucking dump like a sack of shit. Adobe today, and the reason being is that there's so much competition now in their space. That that's tapping into their core business, which is for creator suites basically. But there's so many online options now for creator suites that's separate from Adobe. It's unbelievable. So I've got a feeling this is going to be a big shock to Adobe today. So someone remind me later to check that. Check Adobe. Welcome to the Red Bull stream. If you want to fall asleep, you can do that because the meditation music will do it to you. It's very weird coming from AC/DC inside of Red Pill 5 minutes ago to coming on to listening to this. Right. Namaste, motherfuckers. Debbie Miller, are you not our house renovations specialist from Iowa? They don't call me the elephant for nothing, Debbie. They don't call me the elephant for nothing. For more reasons than one. Oosh! Am I right, Debbie, or am I wrong? The Wibbly Warbler. Yeah, there we go. Nerdlet. Nerdlet. Who's our Nerdler? I've forgotten who it is. Who's our Nerdler? It's Tom, isn't it? It's Trader Tom. Trader Tom's our Nerdler. Where you at, Trader Tom? Yeah, did you know that sounds like a little Wibbler Warbler in the background tweeting along? Yeah, cheers, Tom. Oh, Debbie. Sorry, Debbie. And there's another Debbie rocking your name who does house renovations in Iowa. As a little FYI. You might want to go and have some words about that. Should we get the Wibbler Warbler? Is this the Wibbler Warbler? I think it's the Wibbler Warbler. Let's get the Wibbler Warbler.
Check your postcode at hyperoptic.com and switch to hyperoptic broadband from just £26 a month.
Yummy. It ain't only restaurants anymore. We can go bananas at the grocery store. Did somebody say just eat?
There you go. You guys can spot the Wibbler Warbler now. So today I am expecting a sell-off. Reason being Monday, Tuesday, Wednesday. Looking for a Wednesday high of week for Thursdays, for a Thursday continuation. So I'm looking for a continued sell-off. So at the moment, where my points of interest are would be a turtle suit on this high. Okay. So up at 435. If we start ripping through 18435, I'm going to move to this sidelines, okay? But ultimately, I want to see if price takes out this high, pulls us back into the range. So what normally happens for PPI or CPI, right, is price will take out the 15 high, low, pull us back into this range. That's usually what happens for PPI, CPI. So trading in here is just a no-go, right? This is just absolutely, if you're trading in here, it's fucking stupid, right? So close to this open. But these are both gonna go, right? They're both gonna go. So get used to it. But for me at the moment, I'll be looking to see if it wants to wick down, wick up to wick down. That's currently what I'm looking at the moment. So potentially 381 long, take out this high. For a short, go take out the low. But obviously you got the mad volatility at PPI, so you want to be careful. And if anyone wants a quick lesson on how prop firms actually work and why you should not trade high impact news events, just let me know in the chat and we can do a quick little session on it. If you do not know how prop firms work around high impact news events, we can do a very, very quick little overview if you want. And why you should not do it. Wibbler wobbler. There it is. Honestly. You will go to sleep with that thing in your head. Tonight, guarantee it. You'll be whistling it in your sleep. Yes, I can axe. Tell him to bring out the lobsters. Posh. Yes, sir. Yes, sir. So if you hear DJ Khaled, tell him to bring out the lobsters. It means we printing. It means we be printing. Posh. Also, if you hear Bosh, Posh, that's us hitting TPs. Posh, right? It's when we hit TPs. That's what you get. And if you take a losing trade, which will happen now and again, you're going to hear. Just walk away. Just walk away. I bet I got a copyright strike for playing that. YouTube, is YouTube lagging? I don't know if it's lagging. Is it lagging? Shouldn't be. You guys inside Discord, you guys got it. You just like, it's immediate. No delay. No delay. All right. Yeah, I think it's slightly less than that. I think it's like 6 seconds. I think. Might be wrong with that. So, you see this divergence that we have on this high. Bosh, bosh. This is why you'd anticipate price come run out these highs. This divergence on this high. After what I call and have dubbed delayed SMT, which is something I teach. Okay, so this gives you confidence for price to drive out the high. So for anybody who is out there saying that this is going to be your high, they are deluded. Gauxin, mate. I thought you killed the Wibbler Warbler. Oi. Oh, shit. Right, bloody hell. Bloody hell, Steve. Talk about timing, mate. Is there a 10-minute delay on YouTube or something? Is there a 10-minute delay, Steve? Jesus! Or are we literally typing on our keyboard like this? P L E. I'm gonna ask that question like 10 minutes ago. Fucking PPI in 10 minutes. Jeezy Louise, mate. Prop firm. Direct to market broker. Use Ninja as an example. Market. When you place your order into Ninja, this is mirrored into the market. So it's Ninja who have the direct access to the market. The prop firm does not. The prop firm is a bolt-on. So this information is fed back. So just by the very nature in this delay of data, right? Going from prop to direct to market broker to the market and back, there is a delay. So in high impact news events where you have volatility, which is literally can be hundreds of points in nanoseconds, they don't have the capability to manage that. They physically can't. Unless it's a direct to market broker, they physically cannot handle that delay. They cannot do it. It's impossible. Okay? They can't do it. So what happens is it's like a holding pen where your orders get placed into. Right? Orders. So if you're trading into a high impact news event, there is a holding pen where they hold an order before they release it, and it's a small delay, but there is a delay. Okay, to allow them to sync. So what happens is if you place an order in here, going into the high impact news event, and you have a TP and a stop, in real time, this can trigger your stop and then move up. Or vice versa. It can trigger your TP and then move lower. But what happens is by the time that that has triggered in the market and they have released your order, there is a discrepancy. So what will happen is this delay in time, and this can be literally nanoseconds, they will trigger it as though your stop has gone first, right? Okay, so if it goes boom, boom, this will now take you net short, right? Because of this delay, so it catches up, so it cancels the order, and now it's put you essentially net short, because essentially this is closing a position, right? So you'll be now net short one contract, right? Because you sell to get out of your buy, right? So you'll now be net short one contract. So you'll often see it where, especially prop firms, where you place an order pre-market and it just goes ding, 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 ding. And you're like negative contracts and it's just dumped 300 points. And you're like, what the hell? What just happened there? And then you'll actually go back into the data and you'll see that it actually hit your stop first, then your TP. And this is all to do with the delay in which it takes the prop firm to release that order. Okay, so if you're trading around high impact news events, you've got to be aware that your order is delayed. And that delay can screw you. And you can't say anything because it's in all of their T&Cs, terms and conditions. Do not trade around high impact news events because of extreme volatility. Essentially, they cannot handle the volatility. They physically can't do it because of the speed in which the market moves and the delay it takes the information to come back to them. So they hold orders so it doesn't screw them. And then they release them. But that delay, there is a delay in terms of what actually happened in the marketplace. That is just the reality of the beast. That is one of the negatives of trading a prop firm. All right, so just don't do it. Unless you are up, for example, if you're like down here, long, whatever, and you're anticipating the highs to get in, that's completely different, right? Because, you know, this has time for it to come down, hit your target, has time to get up here. That delay can be managed. Right, but if you're literally trading in extreme volatility, where it goes, you do not stand a chance. Honestly, you do not stand a chance. Right, you're gonna blow an account. All right. So I hope that makes sense. So whatever you do, don't place orders directly going into a high impact news event. The old wibbly wobbler. The old wibbly wobbler. Give us a turtle suit on that eye, baby. Give me a turtle suit on that eye. So today you'll be looking for Thursday continuation, right? That's what you're after. So you're looking to come and drive, your goal is to come and drive out all this liquidity down here, right? Ultimately, I'm looking to get back down into a discount on this weekly dealing range. So I'm looking for this to get cleared out today, right? So don't feel like you have to immediately trade off the open. You have all session to find a trade. So three minutes, just gonna nip to the toilet quick, we're back. He's back with his pie. Good stuff, mate. Thanks for the update. What was in the pie though, Ains? That's the question. Bit of Sweeney Todd, bit of Dave from next door. Minced lamb, oosh. Very nice. Very, very nice. Really, really nice. So it's your 15 low. melt. So no, there's nothing for me yet. Absolutely nothing. Unless it takes both the 15 and the 15 and high low pre 8:30, I don't trade PPI. It really is as simple as that. So we've taken the low, but for me, I'd want to see it take the high as well. So the daily is 48. The daily fair value is 48.50. So I'd be interested at see how price respects 48.50 if it wants to pull up from there. See if you get a little turtle suit on this low. So you can see we now got this little divergence here with the ES. So I'd anticipate NQ to come and run this high. So 82 would be a low hanging fruit, which is fair value on this dealing range on the hour, on the 1 minute. Ah, posh! There you go. Yeet. Don't know if anyone's in on that. I got in slightly early. I was going to parlay in if it went down to 48. I was going to parlay in. So in at 58 out of 80, 20 points, PPI trade. All right, taking it back up to fair value on that 1 minute. Very, very low key trade. Very, very low key trade. A little $500, right? Nothing crazy. One contract. Not overstretching my position. anticipating it's going to want to go and run this 15-minute high, right? That's what we do for PPI. Okay, so you take the 15 low, now your immediate attention will be that 15 high. Right, so you see this little divergence that you had here on the... So this is never what you want to see. You never want to see ES do the turtle suiting, right? You always want NQ to do it. So whenever I see that and I'm anticipating price to pull back up, this is when we can utilize that as confidence for why price is going to go drive this high. Okay, so we came down into a discount. So if we go to our higher time frame, we're inside of a discount. So we're in a higher time frame point of interest where we're anticipating price to pull back. We're also at fair value on the daily dealing range. Right? And we're inside my PPI model where we're anticipating the 15-minute low pre-8:30 and the 15-minute high pre-8:30 to both be tagged. Okay, so that's context supporting the trade idea. Okay, so then we're just looking for an opportunity to get in. Well, as I've mentioned, I was looking at 48. So I was looking at a turtle suit on this low. All right, but if we actually look at this low, this little trigger here, this low to this low, this low to this low, we had the turtle suit in here. So I parlayed it, so I got in here, right? If we look at my chart. All right, so I got in here on this turtle suit. All right, to go and take out this divergence, paid myself at fair value on this 1 minute dealing range. Right? Not looking for anything crazy, right? It's just a little 20-point trade, $500. Guys, that's all you have to do. One a day. It's not crazy. Honestly, it's not crazy. Anybody else catch that on YouTube? Francesco Medici. Good stuff, broski. So this is one of my guys inside of Red Pill. Absolutely smashed it. Absolutely smashed it. Great stuff, AP, mate. Well done. So if you wanted to trade super safe, you just take it back up into a premium of this 1 minute dealing range. I went even lower key than that. I just took it back to fair value. I didn't even necessarily need to want to take it all the way back up into a premium. All I did was take it up to fair value. 20 handles. Bosh. Thank you very much. Right? So how many minutes is that? So I was in at 36. 1, 2, 3, 4, 5 minutes. 5 minutes, $500. $100 a minute. And you got people out there who are trying to Hail Mary 50,000 contracts. Get real. Pay yourself. Get money. Build an account. Build wealth. Stop trying to win the lottery. Base hits. That is what is known as a base hit. Guys, if you can't press the button yourselves, if I give you a draw on liquidity and you cannot find your own entry, like you've got work to do. Like, I don't just want to sit here and be like, just alerts driven dude. I don't want to do that. I want to help people create their own wealth so they know how to trade themselves, and that's what we do inside of RP, right? So I'm giving, I'm laying out the context. It's up to you to pull the trigger. You have to press buy. Right? I don't have the insurance, let alone to say when I'm getting in and when I'm getting out. I can't do that. I don't want you guys suing me. Okay, so you have to press the button. I can give you my draw on liquidity, what my context is, all my models. I can do all of that, but you got to press buy, right? So my style of trading is that I am a turtle suit trader. I trade turtle suits. That is my style of trading, okay? So if you want to know exactly how I trade, I'm a turtle suit trader. I trade primary entries. I trade higher time frame discounts to take price into a premium when bullish, or I trade higher time frame premium to take price into a higher time frame discount when bearish. And I do that by trading internal range to external range liquidity, and I'm doing that around specific times of the day. That is me. Okay, so all your job is to get in sync with that. That's all you have to do. So what do we have here on a 15-second chart? Because I always enter on the 15-second chart. Well, what is this? Accumulation. What is that? Manipulation. What is that? Distribution. Right? Accumulation, manipulation, distribution. I'm always getting in on the M of AMD. So right down here, it doesn't look like anything on a 1 minute chart. It doesn't look like anything on a 1 minute chart, but I'm trading a 15-second to dial in my entry. I'm trading at higher time frame points of interest, but I'm using a 15-second to get in on my trade. All right. So this is AMD on a lower time frame chart. Bosh. This is where I'm getting in. Turtle suit on the low. SMT on the low. Now we had knowing that we had SMT on the high with ES turtle suiting this high, when we know that ES does not do the turtle suiting. Guys, if you're not from Red Pill and you take anything away from this stream today, just know ES doesn't turtle suit. Never turtle suits, ever. Never, ever turtle suits. All it ever does is plays catch up with NQ. Okay? And it's called delayed SMT. And if you don't know what that is, trust me, once you understand delayed SMT, which is something I teach, it will change your trading for good. Okay? ES does not turtle suit. Period. Be all and end all. No if, buts, maybes. It does not turtle suit. Okay? So if you ever see this, Bosh, and you've got context for price to go and run the high, that is it's like the fucking market saying, here you go. Thank you. Take my money. Right? It's easy. Bread and butter. Rinse and repeat. Okay? So, higher time frame point of interest, hourly discount, daily 50%, fair value, providing the institutions an opportunity to take the market higher should they so wish, right? AMD, accumulation, manipulation on a 15-second chart. And this is... And I can use these to get in and trade range. I can do that. I can get in here and hold for 50, 60, 100 handles. I do it. But when we're trading around PPI and we're leading into the news, if you know how to trade my PPI model, you want to be careful doing that. So, just to recap, we know that we had a divergence on this high with ES turtle suit and NQ didn't. We know that we had a turtle suit on this low, which is the turtle suit you want to see. NQ turtle suit in the low. Okay, so what do we now have? We have a dealing range from this high to this low, a 1 minute dealing range. Okay, so we are now taking price from a discount to a premium. All I did was take price from this low, a turtle suit on a 15-second chart, up to fair value. Bosh. Thank you very much. Don't overcomplicate it. Right, but there's no if, buts, or maybes. It's getting in here, getting out there. Right? Don't think, just execute. Elon, go to start, like, do we really have to hold people's hands? Like, go here. Elon, just work your way through the university. So what will we be back inside? We're back inside of a discount of this 1 minute dealing range. All right. Boom, 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 boom. All right. These are a part of X levels. This is the way, this is my style. You want to do DTFX? DTFX is scalping mitigation ranges. You want to do purely ICT? Go and do ICT. So I trade fundamentally ICT, but my market structure is based on my own X levels. This forms part of X levels, the way that I do dealing ranges, and then I also have levels in terms of projections. That is X levels, okay? That's how I trade. Okay, so this 1 minute dealing range is now flipped. You have a premium and a discount side of that dealing range, right? This is X levels, right? So I'm not going to go through it all on YouTube, but you have a premium side and a discount side. Okay, so whether you're now looking for price to go and break the 1 minute protected high, so this is a protected high on the 1 minute, you'd be anticipating price to go out of a discount side to drive out the high. If you were anticipating that, having price reached a higher time frame point of interest on, whoa, I can't write. It's like I'm 3 years of age. Reaching, if that had reached a higher time frame point of interest, which it has, being on a daily fair value, right? With the context that we still have this 15-minute high still intact, right? So the way I teach inside of RP is base rules, and that is going out, is being inside of a higher time frame, premium, going long, trading, accumulation, manipulation, distribution. I'm not going to go into too much detail, but that's generally in a nutshell. I've drawn a pair of titties on my screen. I've drawn a pair of titties on my screen. I've drawn a pair of titties. So if you've learned something today so far, guys, or God forbid you've bagged if you took that trade with me, do us a favour, smash a like. Love you greatly. Love you muchly. Love you muchly. Love you muchly. Thank you very much. So I've just sat neutral now. You're welcome, Ed. Thanks, mate. Appreciate that. All day, every day. All day, every day. It's what we do. This is what we do. AP, you still holding? Are you still holding? And also ask questions. Elon, never be afraid to ask a question. Don't sit there in silence. Do not sit there in silence. Ask a question. A man is only stupid until he asks a question. Right? There's things that I don't know about anything. I'll ask someone who's more knowledgeable than I. Right? Never be afraid to ask a question. If you want questions about certain topics, reach out. Hit me up. That's what I'm there for. Good. That's what he likes to hear, bro. So I appreciate those who have smashed the old like on the stream. It means a lot. Does mean a lot, guys. So thanks for that. So this is where I'm just exercising patience, right? This is where I'm just exercising patience. We are currently in between the 262s on that hourly. For me, this is like a little bit sketchy, right? So I just took a little opportunistic trade, and I'm now just waiting for price to balance and settle out. If it just dumps from here, it's going to dump without me, right? So my PPI models are that I want to see both the high and the low go. So if the high doesn't go, I ain't going to be trading this aggressively short. I'm just not going to do it. This is not because it's why? Because it's not in my trading plan. It's not how I trade. So my CPI and PPI is exactly the same thing. So it's essentially exactly how I traded it on Tuesday, right? Exactly the same principle, right? The high, the low. Waiting for them to get tagged. I'm not going to talk about what I do afterwards. That's the red pillars, but unless it takes that high, I'm not interested. Especially as we've got a whole hosty of divergences up on this high, right? Especially on this particular high. Okay, so we still got this divergence up here. So if it just dumps from here, it'll go without me. I'll be waiting for a mid-morning trade or a trade later in the session to see where price is set up. But that's my little one and done this morning for you guys on YouTube. Took a trade this morning with the red pillars during London, so so for anyone who's jumping on late, this was my little trade today. Just trading off this low, taking it back up to fair value of the 1 minute dealing range. Bosh, signed, sealed, delivered. One and done, baby. One and done. Live on stream, ahead of time. Live and direct. No if, buts, maybes. AP got stopped. There it is. Yeah, good stuff, bro. Really well done, mate. Good shizness. So it's been an absolute monster week this week so far, guys. If you don't want to give back gains, this is where you want to start taking your foot off the gas on the week, right? We've built into this week. Monday, Tuesday, Wednesday, Thursday. Now we start to peel off, right? We get our bags in, and then on Friday we come right back down. So we follow the ebb and flows of the market. Our equity curve and our bank balance follows the equity curve of a professional trader. Not always looking for fucking Hail Marys. Let's go for $3,000 million every single day. Ebbs and flow. Ebb and flow. When to apply the gas, when to take your foot off the gas, right? As important as knowing when to trade and not when to trade. It's not a case of trying to trade every single goddamn swing like you see DTFX, where it's just an absolute mental brain sapping, energy sapping, completely debilitating disease of overtrading, where all you're doing is paying your broker, right? Ebbs and flows, ebbs and flows. So at the moment, the market is in a dip. Go with it. Settle. Balance. Right? If you're still holding runners, you hold runners to take out the 15 high. Right? Patience. Not trade this short, trade this long, trade this long, trade this short. What about here? What about in there? What about potentially here? What? Take your trade, execute, move on, wait for the market to set up a new opportunity, execute, deliver, wait for the market to set up a new opportunity. Ebbs and flows, right? So this is where, as a trader, experience comes in, right? Every bone in a newbie's trader would want to be going, just piling on short here. And in the back of my mind, I'm going, I would like to short here too. Because ultimately, my overall bias is to come and draw out all of this liquidity, to come and run all of this, right? Ultimately, that's my goal for today, to come and work down towards taking out all this, right? So the immediate thing is, oh, let's just jump in here and take it short, right? My style of trading is completely different, right? I'm only interested in primary entries. So I'm not interested in secondary entries in the slightest, in the utter slightest, okay? So red pillars who were trading this morning with us, we were in on this very high. So I'd either want to be holding that high, right? Or I wait for another opportunity to go short. I don't trade secondary entries because of the adverse risk that goes into trading secondary entries. I don't do it, okay? So for me, it's a case of just staying patient. And if price goes without me in it, it goes without me in it. But I don't chase. I never chase. Never ever chase. I never ever chase price. Okay, you just have to take it on the chin. If you weren't in it, you weren't in it. It is what it is. But if you were looking to go short in here, right? You're going short in a discount in the X levels range, right? Right, in terms of the way I do dealing ranges. Right, so you'd be essentially going short in a discount, which is not what you want to do, right? If you want to be going short, you want to be going short in a premium. So if anything, you would want to be going short in this region if you were going to go short. So you'd either be holding shorts up here and paying yourself down here, holding runners to take out these lows, or you just sit on your goddamn hands. And if you weren't in here, you just have to appreciate that you weren't good enough and you didn't get in at the high. Eat shit. Right? Eat shit, you weren't good enough. What you can do is go back and journal why you didn't get in here, why you didn't get in here. That's far more beneficial to you than it is chasing price here. Trust me. So granted, this is fair value on the hourly dealing range. So you could turn around to me and say, X, but this is fair value. This is providing market makers an opportunity to go short. And you would be absolutely right. You would be absolutely right. Absolutely. And if you were to trade that and it went in your favor, fair play to you. Fair play. But my models, my PPR and CPR model are, I have to have the 15 high and low tagged. If that doesn't happen, I don't trade it. Simple. So if it doesn't happen, I don't trade it. Really is as easy as that. So I'd want to be up here in a premium, holding. Or I miss the trade. I wait for another opportunity in the PM session or the late AM session to get in on a continuation or looking for a bounce off a key level on the lows. But I'm going to ultimately potentially miss the main move if it goes off fair value on the hourly. If it goes off fair value on the hourly, I'm going to miss the move. And I am completely okay with that. 100%. But if you're sitting at your desk at the moment and you're absolutely tweaking with anxiety because you think this is just about to carve 300 points and you're not in it, you don't understand trading. Because there are literally opportunities all the time. Even if this was to drop 1,000 points, 1,000 points, and you missed the entire thing. Whoop! You know, if this just goes, yip, there's going to be an opportunity here for 100 points. There's going to be an opportunity here for 100 points. There may be an opportunity here for 200 points. There may be an opportunity here for 100 points. There may be a late day rally for 300 points. And you're sitting there tweaking because you missed this. Doesn't make any sense. Doesn't make any sense to me anyway. So for me, I want to see if it bounces this 48. If it goes through 48, I'll probably be a little bit tweaky that this is going to go on a little bit of a dump. But I want to see it hold this 48, which is basically fair value on this daily. Let's see what the SMT is doing. Yeah, you can see how we got a divergence on this low now. We also have the SMT on there. You wouldn't want to be going long here with this, with the ES taking that low, NQ's not taking that low. You'd be very careful doing that. For anyone inside red pill, there's me just ranting on. Double top, turtle suit, run the low. So 48, I just want to see how it respects 48 for, see if it wants to go working towards those highs. If it goes through 48, I'll probably just move to the sidelines. 2 seconds, guys. Oh, sheesh, I'm back. Sorry, guys. How are we doing? How are we doing? How are we doing? So are you long already? What do you think? So 8 minutes to the open. We'll be careful here. Still our 5-minute dealing range up here. So I'd still like to see it get back up into the midnight. So you see this 1 minute dealing range. These are weak lows, right? So unless price is incredibly heavy, it will go out of the discount side, right? But I'd anticipate at the open it's going to go and run these early shorts, okay, getting back up into a 5 minute premium. Right, so low hanging fruit would be looking at your 5 minute discount side. So even if price is hella bearish, right, you'd still anticipate it to pull back into this range here, right? Right before continuation, you'd still anticipate that, right? To run these early shorts. So currently I'm looking at 69.75. I'm just going to close one out there just slightly before it because that's turtle suiting this high. So I'm just going to hold. I'm just going to hold one runner to see if it wants to go up towards that PPI. So if price is super heavy, it will go out here. But you know what my PPI is, right? It's my PPI is I look for the 50-minute high to go. So low-hanging fruit objective for me is this is going to go back up into a premium of this higher time frame dealing range. So I'm going to look for a fill on this SIBI on the 1 minute, which is up at the whole site number of 4,000, 18.4. But it's high risk. You don't have to do that. You can literally just close your position here. If you want to close your position, feel free to close your position. Posh! I've closed my position there, guys. So I was mitigating in an earlier. So for just full transparency, so this was my second trade, right? So I got in on this turtle suit 52, got stopped out, re-entered to go and take it up to this high, right? So I'm out inside of this discount side, this 5 minute dealing range, just in case it just wants to carve off the open. I've just mitigate myself against that, just running those stops pre-open. So again, just using the turtle suit on the low, right? So I got stopped out initially, got back in on that little turtle suit of the turtle suit So sometimes the turtle suit's going to turtle suit. You're going to get the turtle suit's going to get turtle suited. All right, YouTube. That's going to be my little session with you all this morning. So my objectives for today is to come and take out this liquidity on this low. But that's going to be my little YouTube session. I'm going to hop back into Red Pill today. So just anticipate to chop around for a bit. So I hope you found value. I hope you bagged if you traded along with me on some of those trades. And if not, I hope you learned something. I hope you learned something, right? If not, I'm sorry. We'll do it all again. All right, we'll do it all again. Tuesdays and Thursdays. That's going to be my my little YouTube session with you guys. All right, so I'll catch you all another day. Take it easy, guys, on YouTube. Abush. Dee 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 dee. Dee 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 dee.